Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings. And today we're looking at XBP Global Holdings Incorporated. And get ready because there is a big change coming up for their stock, and we're going to break down exactly what it means for investors and the company itself. So XBP Global Holdings Incorporated has just filed a Form 8K with the SEC, which is basically a report telling everyone about significant events that have happened with the company. Think of it as a public announcement of important news that could affect how people see the company's stock and its future. The date on this report is the 5th of December 2025, and it is packed with news about the company's stock structure. The big headline here is a material modification to the rights of their security holders. What does that mean in plain English? It means something is changing about how their stock works, and it is a pretty significant change. The company's board of directors approved a 1-for-10 reverse stock split. Now this sounds complicated, but it is actually pretty straightforward. Imagine you have 10 comic books, and the company decides to bundle them all together into one new, bigger comic book. That is essentially what a reverse stock split is. For every 10 shares of stock you own, you'll end up with just one share. This change will officially happen on the 12th of December 2025. And by the 15th of December 2025, the stock will start trading on this new adjusted basis. So when this goes into effect, every 10 shares of common stock you hold will magically turn into one share. You don't have to do anything, the company handles it all. Now, here is a crucial detail. If you owned, say, 15 shares before the split, you'd end up with 1.5 shares normally, but the company isn't issuing those half shares. Instead, they're going to pay you cash for that partial share. They'll calculate the value of that fractional share based on the stock's closing price on the day the split happens. So, if the stock was at $5 that day and you were supposed to get half a share, you'd get about $2.5 in cash. After this reverse split, the company expects to have about 11.75 million shares of common stock out there. This sounds like a lot, but it is a way to manage the number of shares when a company wants to boost its stock price. This doesn't just affect common stock, it also impacts other things tied to the stock like warrants and options. The number of shares they represent will decrease, but at the same time, their price to buy those shares will go up. This is to keep the overall value and economics of those options and warrants pretty much the same as before the split. This reverse stock split also required some amendments to the company's official charter. The board had the power to do this. They got approval to make a reverse stock split anywhere from a 1-for-3 to a 1-for-15 split back in July, and now they've decided to go with a 1-for-10 ratio. This next part is about how they communicate important information to everyone. Basically, they are saying that all the information we just talked about from those earlier sections, plus the details in their press release, are all part of this official disclosure. It is all connected. This is a bit of a catch-all for other significant happenings. Again, they are pointing back to the same information about the reverse stock split. It is the main event here. This is a really important part that companies have to include. These are basically statements about what the company thinks or expects to happen in the future. They're not guarantees because things can change, and actual results might be very different from these predictions. Finally, we get to the exhibits, which are attached documents. The most important exhibit here is the press release officially announcing this reverse stock split. This is where the company puts out its official statement to the public. Now, let's talk about why a company does a reverse stock split. Usually, they do it when their stock price has fallen very low. You see, many big stock exchanges, like the Nasdaq, where XBP Global Holdings Incorporated is listed, have rules that your stock price needs to stay above a certain level, often $1 per S-share, to remain listed. If a stock price drops too low, it could get delisted, meaning it stops trading on that exchange, which is a big deal for investors. A reverse stock split artificially boosts the stock price by reducing the number of shares. So for XBP Global Holdings, it seems they're doing this to meet listing requirements, or maybe to make their stock look more attractive to institutional investors who might avoid very low price stocks. The challenge is, a reverse split doesn't magically fix the underlying business problems that cause the stock price to fall in the first place. If the company isn't performing well, the stock price can continue to slide even after this change. They need to show real improvement in their business operations and profitability to see a sustained stock price increase, not just a cosmetic one from a stock split. The fact that they're doing this might signal that the company is facing some headwinds, and they are taking this action to remain compliant with exchange rules and perhaps to reset investor sentiment. It's a tool, but not a cure. Alright, that is our breakdown of XBP Global Holdings Incorporated's latest filing. What is your take on this reverse stock split and what it signals for the company's future? Do you think it is a smart move or a sign of trouble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.